Now let's check number 4. It's saying that we have $2,500 of unearned revenue has been earned at the end of the month. So this simply means that we have unearned revenue before, and now we are earning $2,500 of this month. So we provided services during the month for an amount of $2,500. So in this case, the obligation or the unearned revenue, this liability will decrease, and we will record debit for credit for service revenue. So in this question, straight away it gives us the amount that is earned during the month. So we don't need to do any calculation because it said 2,000 of unearned revenue has been earned. So we provided services for 2,500 during the period. So I will debit this one by 2,500 and I will credit the service revenue by 2,500. Now let's check transaction number 5. In transaction number 5, saying that salaries of 1,500 are accrued at June 30. So these are salaries. This is a type of accruals. These salaries that is incurred during the period but not recorded or paid yet. So I will debit salaries expense and I will credit salaries payable. For the amount of 1,500 and this one, the next one, 1,500. So as you can see, we debited salaries expense by 1,500 because this is accurate during the period, but we did not pay it yet, so I will record salaries payable. The next one, we have an office equipment that has a 5-year life with no salvage value. So the salvage value is the amount that we can pay the equipment for at the end of its life. But this equipment has no salvage value. So it's saying that this company is depreciated at $250 per month for 60 months. So to make our life easy, it said how much is the monthly depreciation. So we don't need to calculate it. So for the adjusting entry for depreciation is simply debit for a depreciation expense and credit for the accumulated depreciation by the 250. So I will debit depreciation expense and I will credit accumulated depreciation by 250. Now the last one, saying that we have an invoice representing $3,000 of service performed during the month has not been recorded as of June 30. So we provided services for 3,000, but we did not record this. So this is called accruals. This is an accrued revenues. So this is services performed but not recorded yet. So in this case, we will debit accounts receivable because we did not receive cash for this services provided, and we will credit service revenue for the amount of services that we provided. So always, as you can see, in accrued expenses, expense not recorded or paid. So for this one, we recorded a credit for sellers payable. And this one, this is we performed services, but we did not record it or receive it or collect it yet. So that's why we debit accounts receivable. And we said the amount is 3,000, I think. Yes. So I will debit 3,000 and credit 3,000. So these are the adjusting entries for this question. So starting with supplies, one for supplies, one for utilities expense, insurance expense, the unearned revenues, accrued salaries, the depreciation on the equipment, and finally the accrued revenues, as you can see. If we go back to instructions, you will see that it's asking me for three things. The first one, prepare the adjusting entries for the month of the June, and we finished this one. The second one, post the adjusting entries. So we have done before posting. We prepared journal entries and we posted and we prepared the above trial balance. Now, next step, after you do the adjusting entries, again you have to post it to the ledger again. The first step is that I will update the T accounts. I will update the T accounts on the ledger by the beginning balances or by the balances that we have on this trial balance. So, okay, let's do it together. I just gave you here the cash balance. I will write cash, and the second one I will write account receivable, and the third one I will write prepaid insurance, so just I will make it short. So this is one prepaid insurance. Let's start with the next one called supplies. The next one called equipment. And the next one called accounts payable. The next one called unearned revenue. The next one capital. And the next one called service revenue. And the We have also salaries expense. Finally, we have rent expense. Okay, so let's update the beginning balance. I will take now the balance from we have from the trial balance. So cash, it has a balance of 7750. I'll just make this one. So I have a cash, a debit for 7750, account receivable debit for 6000. I have prepaid insurance debit for 2400. I have supplies debit by 2000, equipment debit 15,000, account payable credit by 4,500, unearned revenue credit for 4,000, capital credit for 21750, service revenue credit for 7,900. Then the expense, the first expense, I have debit for 4,000 and rent expense debit for 1,000. Okay, so now all what I have done so far is taking the balance from the trial balance and put it to in the ledger. Now next step, I will check these journal entries and the adjusting entries and take the balances from them. So okay, now I will start posting from the adjusting entry. So in the first adjusting entry, we debited supplies expense by 700. So as you can see, we don't have supplies expense here. So I will create a new account called supplies expense, and I will debit it by 700. Supplies, we already have this account, so we will not create a new one, so it is credited by 700. So now I finished posting the first adjusting entry. The second one, utilities expense. Do we have utilities expense? The answer is no. So I have to create utilities expense, and this will be debited by 150. And utilities payable, do we have a utilities payable? The answer is no. So I will create a utilities payable. Just to make it short, I will utilities payable. We'll make it like this.